it is the 10th of October, and it's Old School Remix Day with myself and Rich McDonald.
Old School Remix. Welcome, everybody. How are we doing? Yes, you made it to Friday, the 10th of October, with the Dow Jones having its biggest loss in a whole month yesterday at a mighty down 0.5%.
What an amazing move there. Rich and I were messaging last night. I was saying, look out for the diamond 47.4. And it's looking like we could be seeing the start of, something bigger, do you think?
Well, who knows? It's certainly coming, but I'm not sure exactly when. We had a big discussion on this in The Art of Investing yesterday. That will be with you by 4 p.m. this afternoon. But difficult decisions were made.
Right. Are you going to give us a teaser, or are you going to wait till...
I put forward the idea of putting everything into cash.
Yes.
And Spice replied, that would be a pretty boring podcast. But then CJ said it doesn't mean that it's the wrong thing to do.
Yeah. Sometimes waiting is also a position.
That's right.
Yeah.
And it's actually the exact conversation that Ange and I were having last night, because your daughter has constructed something incredible, hasn't she?
She has, inspired by Rich, because Rich talks about chess all the time and Vodafone being his strongest piece and everything. So my 9-year-old daughter has put her portfolio out on a chess set and stuck the names of the stocks and I'm teaching her how to uncorrelate now. So we were asking about palladium yesterday.
Yes. So
that was my evening yesterday. Loads coming up today though, because we have a belter of guest special treat for you. Right, are we going to go to the coming up first? Here we are.
So coming up on today's show, Angeline and I, with you till 8:10. We're going to do the opening bell. Do we have an opening bell today? Well, we're going to... coming up. Do we have an opening bell? We don't know yet. And then who have you got coming in at 8:10 for Fast Markets?
We have the one, the only Axel Rudolph, but he's going to have to come in from home because his ankle looks like a swollen turnip.
These part-timers. 8:35, I have the wonderful Sammy Ellard King on. He does the Up the Gains and Money Gains podcasts, which I've been on back in February, I think it was. So instead of me going on his podcast, we thought we'd get Sammy in to the show. He's done 153 episodes so far, all on finance, all on investing. We're going to be learning his big lessons there at 8:35.
Nice. And then join me for the pre-market. We'll give you Angie's Market Espresso again. Did you guys catch Delta yesterday? If you did, well done you. And also we will get you across Pepsi. And 9:10, we'll have the one, the only Bill Blaine from Windshift Capital.
Now we have our first official visitors into the new studio today. My very good friend, Sergei Monakov from my back in Credit Suisse Emerging Markets days. His son and daughter are in the studio. So welcome to Olga and to Vlad sitting in the gallery with Pam and Phil today. So very big welcome to them. Now, what kind of volatility was going on yesterday in my life, Ange?
Whoa. Oh, are we talking about your love life, or are we talking about
no exclusives there?
Can we quantify?
That's a VIX of about 4. So yesterday I'm walking down King's Road on my way to Sloane Square Station, and suddenly a young lad cycles into a van, and the van did not lose. The poorest little school kid lost. So he's sitting in the middle of Lower Sloane Street. So just as you come out of Sloane Square, the way all the buses go down towards Battersea. So he's lying in the middle of the road, right? So he's got 4 people around him already. One's calling an ambulance. And I'm just looking around and going, well, that's traffic screwed, isn't it? Because there's no way that all the buses are coming around from Sloane Square. Where are they going to go? So, of course, I try and work out the logic of it all. So I then stand for the next half an hour directing traffic stopping,
You're a traffic warden.
getting all the pedestrians going
Amazing.
across.
The skills of the McDonald's. Traffic warden, trader, you know.
But of course, I had to get somebody to stop all the traffic coming up Lower Sloane Street.
Yeah.
So this woman very kindly went and offered, and she stood about 100 yards down the road. Then the ambulance turns up, so we've got to get the ambulance backed in to where the boy is.
Yes.
And all the buses swinging round. The bus drivers don't know what's going on, so
Yeah.
of course everybody's getting agitated.
Honking.
And I'm like, you've got to, so we managed to get 2 bollards, put the bollards around the boy, but then of course you've got to get the buses to go wide, because it's not their usual turning. So that took about half an hour. The police turn up, and the police don't come and relieve me of my duties. They go and start taking people's questions. I was like, sorry, what are you guys going to take over here, please? Because
so you're on shift for them.
yeah. So it turns out the woman doing it at the other end was actually off-duty police. So I think they assumed that I was as well, because she had told them that she was. So that was a bit of fun yesterday.
Wow. You know, I'm very worried for my co-anchor, because my main, selfishly, my main thought was, were you safe? Because, you know, quite often, statistically, the person likely to get hurt is a person helping an accident scene.
I'm amazed that none of the pedestrians were hurt, because I was getting them going through red lights and everything, and just asking the pedestrians. So, you know, thank you to the people of Kings Road for actually listening to me.
It's a very busy road.
I'm not sure I would.
My goodness me.
So yeah, bit of fun there, bit of volatility, and then after that, then of course the Nasdaq started selling off, which was wonderful. Let's go into overnight action. Check out the rest of the moves, including the Asian moves overnight.
Yeah. Right, welcome back everyone to Overnight Action. Boy, was it exciting. We saw huge moves, stocks ended lower, government shutdown entered its 9th day, Treasury yields also rose there. You know, started a wobble, you're still waiting. I think I'm still waiting. Oil also slipped following the Gaza ceasefire deal. I woke up to this morning to plenty of messages from both sides of the Atlantic asking me, is Trump going to get a peace deal?
Is he going to get a Nobel Peace Prize? Because I believe that's decided today.
Peace Prize.
I'm told he's not getting it.
Oh.
So what is the repercussion of him not getting? He's going to throw his toys out the pram.
Yeah.
And I would imagine he would stop all peace efforts just because hasn't got the prize, because that's what our good friend Donald does, doesn't it? He's in it. He's really in it for global peace. Now there we got the front page of the Times. The MI5 dossier on China threat never passed to spy prosecutors. That will be a really interesting one. The Times are not letting this go. They want China to be labelled as an enemy threat, and they keep on driving at it, and I doubt very much they're going to get it. On the front page of the business section, we have Lloyds and Close Brothers.
Yeah, we missed you yesterday because it was really exciting in the morning. Beachy Head and I were talking about you know, this motor finance scandal and how it continues to dog those two names. Apparently, not enough has been paid out to solve this issue.
Yeah, but we've got a bigger story going on, and that is in the Financial Times. So they lead with the insurers prepare for the first wave of claims from the First Brands debacle. Now, this is really interesting because this is, to borrow a phrase, could it be the canary in the gold mine? Do you like what I've done there?
Yeah.
Is this the canary in the gold mine? Because it's all to do with invoice financing. Now, invoice financing is something I heard about first time about 6 years ago, because my very good friend David Vatchev was going to work for a company involved in these claims. What happens, the collateral for me taking a loan, let's set this up, right? Let's say I am a supplier. Ange is you are First Brands, right? And then Phil is a nice lending company.
Oh, hello.
All right. So
Listening.
So Phil's got all the money. Now you need to borrow money from Phil, right? Because you're having problems to finance your business day to day, because then me, the end customer, doesn't pay you for 30 days, right? So you send me an invoice and I pay you in 30 days time. But you need cash to cover yourself
From Phil.
Phil.
Smells a bit like surprise.
Well, so you have the invoice, right, that you're going to send me. So you give that to Phil and I pay Phil instead. Or when I pay you, the first 20% of it automatically goes to Phil.
Right.
So invoice financing just means that the collateral on the loan is your actual invoices. If the customer gets screwed and can't end up paying their invoice, then you default on the debt and Phil gets into trouble, right? So the likes of Jefferies have got 700 million exposure to this invoice financing. UBS O'Connor have got, I think it's 200 million. And instead of just having them exposed to those loans, they get insurance companies involved and they insure their invoice financing.
Nice.
So if it all blows up, they claim some of it off an insurer. Now, they tried to do this with Greensill as well. Remember, Greensill, the one that killed off Credit Suisse in the end, with that huge, was it 2 billion, 5 billion? Yeah, billions. And they said because it was fraud, then the insurers refused to pay out on it. So it's still going through the courts now.
And it's interesting, the big names are involved that have written these policies that are actually shielding the structure, right?
Yeah.
Allianz, AIG, Coface. I know a lot of you out there have positions in Allianz as well. I know certainly out there, just beyond this door. We have a few clients who have positions in Allianz, so I hope you're listening this morning. But yeah, it just, when I've seen this story and read it in passing, first thing I thought was, this smells so much like 2006, 2007 again.
Yeah.
You know, repackage it and keep repackaging it and pass the parcel.
Pass the parcel, and the where does the parcel end up? That's the thing, right? So already we've seen Jefferies get hit from it. We've seen UBS get hit from it in the hundreds of millions. And the market's gone down, how much? Oh, no, it hasn't, it's gone up. On the week, the S&P is up 25 basis points, even though this huge bankruptcy is going to be reverberating around the financial community. We completely ignore it. And the Dow is down a mighty 0.5%. So let's see how this goes. But this is the kind of thing that when the financial system is so leveraged as it is at the moment, Bigger Biaz has got puts in Jefferies. Interesting to see. Jefferies,
Bigger Biaz, the number I've seen around there is $750 million fund exposure to First Brands. That's from Jefferies.
Yeah.
Norin Chukin Bank looking at $1.7 billion exposure in the First Brands bankruptcy.
So the other question is, what is it saying about actually First Brands? So First Brands, of course, an auto parts supplier, right? The auto market is so bad that this company has gone to bankruptcy. It doesn't just go to bankruptcy overnight. It's been as long as 6 months ago, they were starting to renege on payments, late payments. The CEO was doing Zoom calls with his camera off. Not exactly sure where that changes.
Not a cat upside down.
Not a what, sorry?
A cat upside down. Remember in lockdown, there was a trial going on.
Right.
And, everyone had to log on, and the most famous thing you can find if you Google is the defendant could not get a picture of a cat upside down off the Zoom call.
Oh, that's right. Yeah. Or the local regional council somewhere in England, having a big fight.
Yeah.
So how many others in the auto parts and auto parts suppliers, how many in that supply chain are also going to suffer from this? And then what does it say about autos demand? Well, I tell you, there weren't too many Ferraris going down King's Road yesterday. And
Because he was stopping them all.
I was making sure I was stopping. There was one taxi driver that ignored us both and just drove straight through, almost ran people over.
Oh, God.
And then just black cab drivers. But Ferrari yesterday crashing 15% as eventually the last shoe to fall. We've seen Aston Martin, obviously profit warning. Now Ferrari at last, even with that incredible order book it has, was down 15%. Let's see the chart of how this thing has evaded all.
So are you calling this it? Is this the what is it, that breaks the camel's back? It's
Well-
First Brands, thank you, straw. Clearly only one espresso in so far. The straw that breaks the camel's back.
Well, we'll look at it, right? So every other luxury goods company has collapsed in 2023, 2024. This thing never did because it was thought it was only the ultra wealthy, and it was at the highs only back in July, but near the highs in September. And now we're back to investors have lost all their gains from February 2024 in one day. Is this what's going to happen in reporting season?
Well,
If you're not in AI, this is outside the AI argument.
yeah, it's going to be interesting because it really depends on how things play out elsewhere, and if we still see liquidity being very, very ample. If we see that Trump maybe is going to, we might be surprised in 24 hours, and that might change the mood music. Optics is everything.
What if he gets the Nobel Peace Prize?
Can you believe it? I might have to actually go to a pub to have a drink if that happens. I mean, my God. Yeah, but also these issues to do with Greensill, to do with Parmalat. Remember in 2003?
Oh my goodness, that's a blast from the past.
Yeah.
Don't cry over spilt milk.
Oh, he's full of it. This man's on fire. It's on fire. It takes quite a while for it to kind of play out, but when it does, it just goes bang, right? The question is how long is it going to take? Insurers, by the way, Parmalat in 2003 did have to make payouts because they were not able to prove that banks had any knowledge of the fraud.
That's of course, yeah. So the one with the insurance policy has to know that the fraud is going on,
Yeah.
which clearly First Brands they wouldn't have.
Yeah. Speaking of that, one thing that was soaring, I got lots of messages from friends in New York. Thank you very much there. Analysts there, I still keep in touch with them because it's always helpful. They give me a heads up ahead of my day job with Rich in the morning. Delta.
Oh yes, tell me what happened.
Delta did so well as expected. If you heard my market espresso yesterday, the expectation was that it was going to really come up with strong earnings. Its Q4 profit forecast was strong. Its shares, when I last checked yesterday, was up some 4%. Let's see where it was.
Yeah, closed up 4%.
Yeah.
Or is it still on the? No, it's on extended hours.
It's
good old
extended.
Delta.
Yeah. So it's stronger than expected third quarter earnings, and it also boosted the S&P Airlines Index by almost 2%. So this really giving that sector a real sort of good start.
Yeah, it's interesting though. The European airlines do tend to fly different, don't they? The stock prices. There's not too much correlation between the two, because if we look at EasyJet. Let's see, Olga, you go on a lot of holidays around Europe, don't you? Who do you fly with normally?
Iberia.
British Airways?
No,
Yeah.
Iberia.
Oh, yeah, Iberia. Yeah, okay. So IAG, well, we can see, first of all, let's take a look at EasyJet there. Oh, it's just, it's very different from the Delta
It's
one,
very
let's
different.
see.
And Delta and United tend to fly pretty much similarly, and they, as Rich rightly said, they fly different to the European ones. I would also,
Well,
I would
look,
also
look at
say,
IAG though.
yes, IAG and the budget airlines also fly differently.
Yeah.
And IAG is storming because, you know, the two things. One, oil prices have been low for such a very long time. They've already been hedged. And we've seen time and time again the interesting world that we now live in where geopolitics, you know, nothing seems to get that oil price up. And IAG also flies these routes. Andrew McKilvey is an expert in this space because our routes they largely avoid those hotspots, you know, mostly long haul. I've never flown Iberia actually. So, yeah, is it good?
Is it good?
I think it is.
We got
Olga's got
thumbs
it.
up for Iberia. I haven't flown Iberia for about 15 years, I don't think.
I have never looked at. Does she want to mic? I'm being asked, but
We'll get Olga on mic later on.
I have to say I flew Air France KLM and never again because I think I was just unlucky.
It's terrible.
It stalled several times on the runway and we had to
What?
wait. Yeah, and I thought surely we're going to get moved off and they're going to change planes, but no, they didn't. So I was there going,
My Lancaster bomber didn't even stall on Wednesday, and that's 80 years old. Right, it is 7:51, and what else have we got coming up? What are you going to be watching this morning as we open?
So definitely the pre-market is going to be interesting because after the moves yesterday and especially keeping
Sterling's
one eye,
getting smashed.
yeah, it is. Also, taking a look at the stocks that rose on the Nasdaq yesterday. The reason why I'm saying this is because 1,694 stocks rose and 2,966 fell. Declining issues outnumbered advances.
And gold at last came off. That was I got to the point yesterday. I am, as you know, a big gold bull in the long term, but short term, that was it. It went parabolic through 4,000. I saw yesterday morning, I was watching, you didn't even know whether it started with a 4 or a 3. And Chris Beecham's, I think it's still above 4,000. Well, it wasn't for long.
No.
We saw a 2% sell-off in gold at last. And, you know, is that the blow off top? It certainly felt like it.
It did feel like it. And also I was watching volumes there. And many of you on the show, I think Rich is also tired of me sending him messages about platinum and palladium. You know, it's often said in mining that, you know, once you see gold have a really good run, silver tends to follow, then platinum, then palladium.
Well, silver was still up on the day yesterday.
It was.
It was well off its highs.
Yes. But it's all about the momentum here. And I'm going to bring up my platform to show you what I'm talking about, which is how I looked at the market yesterday. And you can see it in the weekly chart. So basically, if I go to...
If we just have a look at that, Ange. Now, people say that something goes parabolic at the end of its rally. That is exactly what you're looking for. Yesterday, the big move, where's the end of my graph, excuse me, that big move with that candle there, that's worrying for the end of a move, isn't it?
Yeah. Which is why when you see it go parabolic, you want to get in on the party. Imagine you are in, gosh, so show my age now. Olga will know this. So you know when you have a nightclub, but there are 4 rooms, yeah? There are 4 rooms. You want to be dancing in the one where it's heating up, but you know that the sound and the vibe is ebbing. So you then spot the second room and it's just about getting started, right? Rich is getting his silver shoes on. Phil, yeah, taking his shoes off.
My leopard print, pony skin shoes, I'll have you know.
Oh, there you are. So you want to be in on that silver shoe party because everyone's moving into that room. You don't want to stay in the gold room when it's starting to, you know, lights are starting to flare.
So sorry, you've moved from the gold room to the silver room.
Yes.
What's your next room? Platinum.
Platinum. So I already moved several weeks to platinum and I'll show you for why. But as of yesterday, It was the Palladium room, people. The Palladium room.
So this is your last room in the club.
The last room before I head for the exit.
Well, where's the after party?
Angela's house, Olga's house, basically, or Richard's house. So having a look, the key thing to watch out for here, and I'm going to try and see if I can show you. So showing you the gold room first on the weekly chart. You know, you can just see, don't take my word for it, just hover your cursor on the IG platform on the weekly chart, and you'll see it's up 2.062% on the weekly chart. But if you go to the silver and do the same thing, you'll then see that this is up 3.7. Fast forward to the Palladium room, people. Palladium. Ta-da! And this is on the weekly. Can you see it's a 10, almost 11% rise there. And it has broken through the highs of the 14th of July.
Yeah.
Yeah? So the room is starting to heave in the fourth room.
Well, and this was, you know, Ferrari cancelled their EV plans as well. So, because I'm sorry, you don't buy a Ferrari for an electric engine. So, so yeah, that's another thing playing into your palladium and platinum call there as well.
We should give a call to Sunseekers after this, because Sunseekers is also another great months ahead heads-up display to what the world economy is doing.
Right. That's the yachts, is it?
Yes, the speedboats, darling.
Have you got a direct line into Sunseekers? Right, we'll leave you with the Moore Minute. That's right, straight from Luke Moore. Risk-off sentiment dominates the Asian session as China-US trade tensions resurface and Beijing's crackdown on NVIDIA AI chips. That's another story in the Times this morning. Has it affected the NVIDIA share price? No, we went to new highs. So China is stopping all NVIDIA chips now at the border, but NVIDIA goes to all-time highs. That's fine. That's what happens in a, don't know what I'd call this market at the moment.
Says the bear.
Prompting profit taking. Prompting profit taken from record highs across stocks and gold while the dollar strengthens amid ongoing government shutdown uncertainty. That is the Luke Moore Minute. We'll be back with you in 2 of those minutes to have the market open. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to The Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. Well, Boise, I have to apologise, my friends, because we can exclusively reveal that Boise was the gifter of our bell.
Which
but
one?
We got a new one in town. We got a new one in town, and here it is. The famous white bell. Let's see. Oh, da 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 da. Yes, there it is. Are you gonna? There we go. The London Stock Exchange opening bell. So we have it. Luke Moore, eat some of that.
Wow.
So
Goodness me.
we are. I can officially say I closed the London Stock Exchange at its all-time highs, because now if it sells off, that will remain the all-time high.
Fantastic, fantastic.
So let's see the moves right this morning. Diageo, sorry, Ange, up 80 basis points, 18. Is Diageo the one? Is everybody turning to drink this weekend because of the losses that are about to happen? Tesco, where you get your best clothes, up 60 basis points. Marks and Spencer's following it up as well. And Lloyd's at 84 pence. What else do you see there?
Kingfisher also up 0.5%. Kingfisher, obviously behind B&Q. Lots of house builders and also consumer names there. Legal and General also slightly higher. Let's take a look at the losers list now. Miners, Fresnillo is the top of the losers board, down more than 3% there. Ferrexpo also down.
It's all the miners.
9%.
Antofagasta down 1.8. Copper selling off from its highs. £27. I do not remember seeing Antofagasta as high as £27 before.
First stock I ever traded. You never forget. Rio Tinto.
Really? Some
down,
fags.
Yeah, 1% there. HSBC down 1% there after getting hit earlier in the week. And Shell up 2/3% there.
So it is the commodity sell-off. That is what dominates your losers on the day. Silver, iron ore, for expos being iron ore, copper, and then, yeah, to some extent, the bigger ones as well. So all down off their recent highs. Rio's crossing £50 yesterday.
Now, Jugger, you're not too late into high-ho silver, depending on your duration. Obviously, if you're thinking about slightly longer duration, then it's, but if you're talking about, a week, a month, then maybe you might have missed the party. To the next room.
I have a really shit position on in Stellantis. That is, I am short.
Language.
This piece of shit. I'm sorry.
Again, to
But I am
wind the gallery
doubling
up.
down. Excuse my language, but I am getting absolutely hosed in that. And obviously long Porsche against it. I'm long more Porsche than I'm short Stellantis, but still it is hurting. So I'm going to have to set a stop loss there. Where is it going to be?
Use your ATR, darling. Use your ATR. Just for those of you
As
just
long as it's not the
joining,
88.
just joining the show, Stellantis, their third quarter estimated consolidated shipments 1.3 million units.
Porsche is up as well. So there we go. So that's, at least we're not losing any money net this morning. Porsche up 1.2. Heineken up 1.2, so helping with Diageo as well, as is InBev. And do you know what I learned yesterday?
Go on then.
InBev's the biggest stock in the South African Stock Exchange, the highest weighting.
I am, I did not know that fact, but Brewers looking like having a good day overall. It is Friday, after all. You're heading to the pub after this?
We are out tonight, actually. We're going to a charity do at the Ministry of Sound tonight. So this is all my finance boys, all the ex-Credit Suisse guys. Yeah.
Scotty Byrne going to be there.
Scotty Byrne is NFI. But yeah, Vatch, Stuart Holt, we're going. It's Malcolm Pratt's birthday today.
Oh.
So Malcolm has been at Bank of America,
surname.
he's been at Goldman's, he's been at Credit Suisse, he's been at Deutsche Bank. So Malky Malk is the same age as me, 38 years old today. And we'll be celebrating that tonight at the Ministry. I don't know. I might do a Cinderella.
Oh, or you might do a French goodbye.
What's a French goodbye?
I'm not gonna. Not,
Get
it's
sacked
still
after
a
6
bit
weeks.
too early. It's 8:04, not past the watershed yet. Message me if you want to know what the French goodbye is.
Is there a Russian goodbye, Vlad?
Is there a Russian goodbye?
Not really.
Come to me later if you want to know what French goodbye is. Aviva, let's get through some of the moves. Aviva cut to underperform as well. And ArcelorMittal, Goldman Sachs, they're cutting that to neutral. Take us through the currencies, Rich.
Oh, 133 on cable. It's so worrying going into the budget. What, we got 6 weeks until our budget special that we're doing. Yes, we are going to come to you live over the budget after those decisions are made. We'll be on your screens at 1:30 p.m. summarizing everything. So our first ever afternoon session. The yen has found some consolidation at 152.5. Of course, after the shock Prime Minister win from last weekend. And then going down to the indices, FTSE right on 9,500. And yeah, nothing, no big movers. Hong Kong was off overnight, and Japan gave up some overnight as well.
Taking a look at some of the stories that been looking at recently, one of the ones that I found quite interesting this week is loads of people were asking about hemo. Do you know about hemogenics?
Oh, I thought it was going to be the new FOMO.
FOMO.
Oh, is this for blood?
Yes.
Right.
Yes. And just telling our trader friends, I have got in touch with 2 specialist oncologists, not only consultants but professors, to take a look at that stock for our clients because apparently it's going to revolutionize
Blood doping.
blood cancer.
Right.
It's a very, very small stock. There we are. And the ticker is HEMO. And just quickly looking at that for you, can you see how much it's bounced recently on? This is the daily chart, friends, here. I am awaiting imminently details on that from 2 professors in this field. One of them specializing in pediatric blood cancer. So give me an email if you have specific questions and we will check that for you.
A couple of questions there. Sorry, I missed them in the chat from Julian and Boise helping me out as well with the answer. So Tasty UK has been discontinued, right? So you cannot any longer open positions on Tasty through the IG UK platform. But the good news is you can just do the paperwork, right? And I have to do that. I'm still terrible. I haven't been able to do it. And then you will be opened a Tasty US account. So Sosnoff went through all the problems of like trying to fix the Tasty UK platform, trying to get as close to the adult Tasty US platform as possible, but you know it never really quite got to matching how brilliant the Tasty US platform is. So now you get upgraded, if you like, onto the real deal, the original Tasty US platform. But we do have to do it by October the 26th. So we've got about 2 weeks. It doesn't take long to do the paperwork and then them to transfer the positions across, but everything will be transferred. The only real pain is that you have to have a separate app rather than it going through the IG app through to Tasty UK. So
yeah, we're going to try and get Jolie Lepselter on the show to try and talk many of our clients through it.
She can help me do my forms. And we'll do that
live then. Why not? Why not? We do everything live here. Anywho, yes, Rich has been next to me, kind of like saying, I must do this, I must do this. Speaking of which, Arsaxana, how do you get exposure to different metals? Arsax, who has met my daughter, incidentally, at the options trading event. So you can go a few ways. One is if you're looking at physical, then Sharps Pixley. I am teaching little Emma how to invest and how to look at uncorrelated assets at the moment. So I'm showing her, and I have positions through iShares. If you're looking at something that you can do, quite easily and show a tiny human being how to do it. So iShares Global X also has a lot of ETFs, or that has the physical as well. So plenty of options out there. Good morning, Kate Murphy. Where are you right now? Kate's always on a boat or in someplace exotic drinking wine. I'm very jealous.
Now, one of Kate Murphy's stocks, producer Phil told me there was a bit of chat yesterday on SWC, and I'm just going through it. No way. It traded down to 81 pence yesterday. SWC trading at 81 pence means that it is at parity with its Bitcoin position. So, wow.
This was a lot of chatter on this on the Discord yesterday.
Oh, really?
Yeah.
I mean, that's just illogical, though, because that means they could obviously sell all their Bitcoin, which he can do in an instant, and then you've got the whole value of the shares.
Time to get him on.
It is. Well, yeah, we've got Andrew coming in about 12 days' time. So let's see. But unless you'd have to be bearish on, if you're bearish on Bitcoin, then I can see why you would sell your shares. But, okay, I'll have to go through that one. But thank you, Phil, for highlighting that.
No worries, R. Saxon, Julian saying thanks, Rich, as well. Taking a look at a mover, Hayes up 1.7 there. Hayes seeing a small seasonal recovery in net fees, but just beware. Cautious outlook with limited visibility carrying through to next year. Another one that your guests have highlighted recently that's caused a huge amount of chatter on Discord, Defense Holdings.
Oh, what's it done this morning? Go on. Could be anything. Is it up 25 or down 50?
It's a bit more benign this morning, but still up. You know, up just 0.75% there. Announcing a dual listing in the US OTC market, along with and an ATM equity scheme.
Interesting. Right, Pinsana, the other one of our good friend Graham Dixon, that has benefited from the chatter around the Chinese rare earth curbs. So they are, of course, putting export restrictions on. So Pinsana, remember, has rare earth mines in Angola, and the US government has been doing deals in rare earth. So Pinsana continues to be re-rated, now up 53% from where Graham Dixon mentioned it the second time, and up about 100% from when he was first on the show. So Pinsana, see, normally I would, it's the one stock I've got left in my SIP and ISA. No, sorry, I tell a lie. I've also got an India ETF, so I've only got India ETF.
Which one? Because I had the head of the EMQQ and ENQQ come on, and he was very bullish. Kevin Carter, very bullish on India and the internet story there.
There are some funny ETFs going around at the moment, and I believe that there is a new bot ETF.
Don't give it away, because until I see the eyes or no eyes of this humanoid robot, I'm going to unveil it.
Well, let's just.
Spoiler alert!
I believe there's been something going on in America at the moment. But yeah, that's just a little teaser for what we could see next.
For those of you watching, scratching your heads, we're dropping several hints because we're hoping on something quite remarkable, quite spectacular to come into our brand new studio later this morning.
Oh no, sorry, I thought you were taking it to the party, to the fourth room in the party.
Oh, the Palladium party. Coming to the Ministry of Sound, didn't you hear?
Yeah. Go on, let's get the picture up there. This is our friend that's coming to Angeline's fourth room party.
Not only do I bring you plenty of high-profile CEOs, but as I go off on my holiday quite soon, Rich is going to need someone to keep him company. So I'm getting a
Yeah, exactly. Yeah, we need a new presenter. So, Vlad, are you up for it? We need you back. Are you in London for a while?
Yes.
Yes, perfect. Right. Olga's volunteered
also
as well.
volunteered, yeah.
So we can share it. You can do a section each.
Yeah.
So yeah, that's right. Angeline daring to go off on holiday. Where's the destinations?
So I will be flying into Asia. Destinations, the order's not quite yet confirmed, but it's likely to be Singapore, Kuala Lumpur, and Thailand.
Is it the Grand Prix?
No, it's not the Grand Prix.
No?
It's Mama Ong will disown me if I don't go back. Worse. I always know I'm in trouble. Do you have this when your mum calls you a certain name and you know you're in trouble?
Yes,
Yeah.
Richard.
Yeah, whatever she said,
Yeah.
you just, yes, yes. So that is where. Okay, guess the chart's coming up next.
What part of the world are we in for Guess the Chart today?
Yeah.
It's a US stock. Was it? What was yesterday's?
It was EU yesterday. I mean, like, you know, not trying to refine it at all, but it was quite wide. It was EU yesterday. So this time it's a US stock.
And is it a tough one or an easy one today, Phil? You think it's a tough one?
Okay.
First brands. Right, let's go to Guess the Chart. What kind of music are we going to have for a Friday? Is it I Can't Wait for the Weekend to Begin?
Please say it's Avicii.
Stepped on the floor with the chart in mind. Saw that graph and it looked divine. Spiking high with a disco strut. But is it real or just a little bluff? Neon lines and a price so bold. Moving like the stories Wall Street told. I've got my mouse and a disco heart. Feeling brave enough to guess that chart. Guess the chart under the lights. Is it breaking out or faking heights? Could be silver, could be soy, could be junk bonds dressed like a playboy. Guess the chart, I feel the beat. RSI dancing at my feet. No idea where this will start, but I'm staying alive to guess that chart. Fields in sequence throwing shade. Rich is stressing every trade. Angeline's got the disco stare. She gets gold and flipped midair. Everyone's guessing, everyone's wrong. But the party don't stop if the vibe is strong. It's not the profits, it's the art. We're all just here to guess that chart. Guess the chart, spin the wheel. Is it guess or just good feel? Could be meta, could be right. Could be IPOs that made you cry. Guess the chart and boogie down. Even the Dow can wear a crown. One big spike and a little hard. It's high stakes love when you guess the chart. Rich now, the Sims go wild. Like a candlestick on freestyle. Zoom out, zoom in, who really knows? We're just vibing through the trading flows. Guess the chart, keep the pace. Is that a breakout or just some face? You can analyze or dance real hard, but deep inside you'll guess that chart. Guess the chart, don't look back. Every move's a disco track. Could be boom, could be bust, could be a Ponzi dressed in trust. Guess the chart, live that dream, glowing hot like kerosene. You don't know where it's gonna dart, but you know you're born to guess that chart.
Hey, trader friends, welcome to Fast Markets, and I am joined by Axel Rudolph for a charting spectacular and also a special guest. We have Olga with us in the studio. You ready? You ready to go from party room to party room? Fantastic. Right, so in Fast Markets, we try and get our clients and our trader friends across all of the biggest movers. Let's start off with the FTSE first, putting my chart up there. Axel, any of those big movers pop out at you?
Yes, I think WPP looks interesting, up 2%. Certainly a stock to watch out for. And otherwise, I mean, Compass as well is not bad.
Yeah. We were talking about First Brands earlier as well. And, you know, clearly the market for now, keeping calm and carrying on. Any others that you like there? We got the LSE. We have an LSE bell here in case you missed that at the start.
Yeah, I mean, we can look at wherever you want. As you know, I'm not fast today, having twisted my ankle.
So Olga and all our clients, investors who are watching, Axel had partied a bit too hard and is nursing a very swollen ankle. How did you do it, Ax?
Playing tennis. Really stupid. Just at the end of a match. But yeah.
It now resembles...
Black and blue now. Black and blue.
A black and blue squash is the only way to say it. Right, let's have a look at the losers list. Olga, read out the losers list for us. I'm going to zoom in for you. Any of those names, I'm just going to read them out. Any of those call out to you. Rio Tinto, IAG, AstraZeneca, Shell. Use any of those names there? Shell, yeah. For petrol, clearly, you are a family that still has a petrol car. I miss petrol cars. Can I say that? Can I say that? Yes, I just did. I do have an EV. So let's have a look at France. Right, here we are, Axel.
Yes, I mean, France, obviously, with all the political turmoil, a lot of things going on recently. Kering is quite interesting here. Stellantis as well. And then also the banks. Look at BNP Paribas up. But it all has to be seen in the context of the sell-off we saw earlier this week because of the ongoing political turmoil, actually.
Yes, can you still call it a political, meltdown when it's been going on for so long? Possibly.
Well, I mean, the problem is the debt financing for France. That's always the problem for everyone. And then people don't seem to realize that all this political jostling is just hurting everyone because they need to pay higher interest rates in order to pay back their debt. Then again, in the UK, we've got the same problem. I think the interest on our debt is bigger than our budget for education. So yes, in France, it might be a recurring thing, but in the long term, the French debt is going to be perhaps even more downgraded, and it's going to hurt everyone there. And I find it unbelievable that they cannot guarantee, or that they actually want to change the fact that the pension age is going to go up 2 years, which is still much lower, I believe, than anywhere else in Europe, isn't it? I think 64 they wanted, 62 at the moment. I mean, it's just ridiculous. Somebody has to pay for things, don't they? I mean,
exactly. The buck has to stop somewhere. To Germany now, just very quickly, because we're getting lots of questions on the chat for you, Axel. We got, let's have a look at the winners list first. We got Mercedes-Benz revving higher, 2.3% there. Porsche also moving higher. And we also have Adidas up almost 8%. Losers list there. Siemens Energy and MTU also down there. Rheinmetall down 8% there. Right, back to the chat now. We have a question from, first from someone that asked about Funko. Who was that? Wing It asking for you to look at Funko. This was a stock that was talked about by my guest, Julian Wheeler from Shard Capital. I have to say, I have looked at this. It's still a bit too funky for my liking. What do you think from a chart point of view?
same here. I know, I mean, these stories can turn into the big profits you talked about, just a few minutes ago with Rich. But right now, technically speaking, I mean, look at it. It's still a series of lower highs and lower lows. And the latest bounce we saw into September, that has given way to a lot of selling, as you can see. We're just testing this support at the moment. And to me, that 3,000, is it 311? I can't see it on the
Yes,
daily financial bet.
311.
Yes, it is. That support, if that goes, and at the moment you can see that we've got previous highs, previous lows, it seems to be holding there. But if that were to go, we may actually slide back down again towards the lows we saw earlier in August. So for me, unless we take out the high in September, the trend's your friend. It's still not looking bullish. So yeah.
Yeah, and
Technical,
so
that's the technical view.
that is the technical view indeed, and also until it crosses Angie's rainbow lines, that's the what I say to Emma to try and teach her about the EMAs. It is still looking like one I am not going to touch there. So Funko, of course, behind Funko Pop. Something that I learned on this show as well, because I didn't realize what the bobbleheads were until now I can't stop seeing them. Let's have a look at grid. Axel Fryer Tuck, thank you for that question, asking you to look at grid.
Right, another stock I know nothing about. Just full disclosure here.
No, I love this because I have a position in National Grid, but also I love that you can talk about it because
the National
it
Grid.
allows me to then draw the technical lines as you're talking.
Yeah, no, National Grid I do know.
Here
Of
we
course I do.
are with support
So
there,
here,
996.
that is a stock I like. Why? Because we've broken out. We're in the process of breaking
Yes.
above these highs just on the left-hand side of your chart. And it looks as if today we may actually close above these highs. And it's really important that this happens today on a Friday, because that's the end of the week. So we would basically have, if that were to happen, a weekly chart close above those previous highs. And that is a good bullish signal, because this upward momentum we've seen over the last few weeks and months continues and has taken us through resistance. So that's what you want to focus on. And yes, I mean, the next upside target is that high going back to, I believe, 2012 or something like that. It's, yeah, exactly that one there. So looking very good, National Grid, looking bullish. We've had 3 consecutive months of gains. And the fact that we could potentially today on a Friday closing basis close above that resistance is bullish, basically. Yes.
Nice, nice, nice. And Olga here probably wondering why I'm making all these circles on the chart as Axel is speaking. You know, you're familiar with, you're probably too young for this, but Beyonce always says, to the left, to the left. We always look to the left of the chart because markets, it said, have memory. And this is a reflection of, you know, perhaps, you know, algos out there, right? Institutions looking at the same levels. So I love it when Axel talks about, you know, different time frames, because what we look for is a confluence in terms of the time frames. And from the weekly, you can see that I have circled that. It has popped its, you know, the green candle above that perforated yellow line, showing you where the resistance is there. And also for the monthly chart, you're seeing the same thing. So a confluence of this helps you, doesn't guarantee what's going to happen, but it tells you that the likelihood of that trend continuing is higher. Right, we have another question from Monkey Man, who would like you to talk about Cisco Systems, Axel.
A stock I do know something about. So yeah, I mean, Cisco's looking bullish, as you can see here. I know some people talked about a head and shoulders forming. The problem with that is people always think it might be forming in the future, but unless you take out the neckline, it's not, and it hasn't. And clearly what we've seen here is just a sideways consolidation phase. And now that we've risen above the previous high, I think going back to, it was June or something like that on your chart, it looks to me as if we're heading back towards the high we saw in August. So looking bullish again. Why? Because today, you can see we're trading above exactly these highs here. So we've broken above the resistance. We closed above that, I think on Thursday, so yesterday or Wednesday, can't remember now. But yes, it is still looking bullish, despite on the daily financial bet, the red candle at the moment of forming. So unless we take out the previous candle, the big green one from yesterday on the downside, which would mean a reversal signal, that still looks bullish to me, yeah.
Fantastic. Thank you. Do we have time, gallery, for SSE for Andrew McKilvey? Right. Andrew McKilvey asking us to look at SSE here. Here we are.
Yep. SSE, another stock I know and I like, because
Yes,
look at it.
the
I mean, it's just going
momentum.
higher. And it is now entering this sideways trading band we had, sort of slightly higher up from here. But to me, that chart is still looking bullish. Series of higher highs, higher lows. We've taken out the previous resistance going back to, I think, earlier September. So for me, yes, I mean, I wouldn't be worried here. If we get into the sort of 1,900 area, maybe we could see some resistance there. But right now, the trend is your friend, and in the short term, it's pointing upwards.
Nice. Right. We're going to have to wrap it up there. Blake 7. I see Rolls-Royce as well. But our next guest is waiting in the wings. So we're going to have to take a look at that for you on Monday. Do remind us, Blake 7. Olga, thank you so much for, I hope that's been informative. Olga has been very, very wonderful and so patient here watching me try to draw as fast as Axel can talk technical analysis. Thank you so much, Axel. Always a pleasure having you on.
Same here, Angeline.
Right. We've got Sammy Ellard King coming up next.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to The Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. Welcome back. So, my good friend Sammy Ellard King here is usually the one who's doing the interviewing, but oh, the tables have turned today, sir. Welcome to Trade Live with IG.
Thanks, Rich, man. I'm really happy to be here.
Yeah, it's great to have you involved. So, those of you that don't know then, Sammy has been running the Money Gains podcast for 153 episodes, one of which I was very proud to be part of. And we got another one coming up on Monday.
Yeah.
How did you first start? How did you come up with the idea of podcasting?
Podcasting really, so for me, we have a content business. One of our streams is the podcast, and we like meeting people where they want to learn. So some people like listening, some people like reading, watching, and so we operate in all those spheres. So I'm a podcaster. I learn everything that I know off podcasts and shows like this or things that are online. I prefer listening rather than watching. I'll have it on in the background, but I'm very much on my headphones doing the dishes kind of thing, and I'll learn during those times. So that's why we did it, because also selfishly I meet great people. Yourself one of them, of course, and it's great for networking, but I also learn so much as well, which I wouldn't necessarily have perhaps ever even have thought about. So it's different people's perspectives, which I can then put into our own content as well.
And I guess, because I mean, I think of you as the better Stephen Bartlett, basically. And take us through some of the guests that you've had on there.
Yeah, we've had Andrew Craig, so author of How to Own the World. Brilliant guest, always does extremely well. Good friend of ours, Michael Taylor from Shifting Shares. Hilarious episode, actually.
Yeah,
I love him.
He's got such a dry sense of humor. It's brilliant, isn't it?
You don't know it's coming with him, and then he just says something, and I'm like, oh my God, that was hilarious. And then I laughed because I was so shocked at the way he delivered it. And he's great.
And that's a dream for, of course, your boss, Danielle, is in the house today, filming in the back behind the cameras. And that's, getting those cut downs is perfect for those kind of snapshots, isn't it?
Yeah, that's a big thing of what we do. We like sort of cutting the little clips up and taking little moments out, and that brings in new people into the show. And so it's just been great. Like, we hit the top 3 UK business podcasts last week.
Wow.
Just insane. And so it's been one of them things. Podcasting's hard. Like, it's like a hockey stick. Like investing and compounding, it really is. It is exactly the same. It's almost identical to my own investment portfolio is the journey of the podcast.
Right. And that's because word of mouth just accelerates the number of listeners.
Yeah, and it's just really hard to grow. But then once you get that breakout episode or someone like shares it and it goes viral, then you can really sort of take off. And if you keep doing that, eventually you get a big hit. And that's what happened. We had quite a big viral clip go, and the listenership just flew up almost 3x overnight. It was crazy.
Wow. And so who was the viral clip then?
Andrew Craig.
It was, yeah, because he's, so take us a bit, for those of you that haven't heard of Andrew Craig, a fantastic book that you might want to order. But yeah, take us through Andrew's, what you learned from him on that pod.
Yeah, so it's really interesting. Obviously, we were unpacking Rachel Reeves in the budget and the impact on working people, like vicariously, essentially. Like, it's not obvious that it was impacting working people, but when he laid it out, it was quite obvious it was. And I was just really enamored by his perspective on things. And then one of the ideas that he had, obviously, as we know, the UK stock market has had a real problem with IPOs and money flowing through it recently. And so he had an idea of getting money into small cap businesses, because small caps, medium caps are finding it very difficult to raise.
Love the idea.
So he had the idea of £5,000 for every child when born invested only into small UK cap businesses. And you can add to it kind of like a junior SIP, similar to the Gordon Brown's Child Trust that was out in the 90s.
Oh, I didn't know about that one.
They gave £500, but it was poorly invested and it wasn't in the right places. So some people actually ended up with less than what they put in on minus fees, which is just wild, right? So that is really important.
Because it was ring fest, wasn't it? So it was
exactly.
So £5,000, even if it's 2.5, but invested in UK small and mid caps.
Yeah.
And when the child retires at 55, then it was estimated it would be £1 million, right?
Yeah, £1 million for each child. And the incredible thing was it's actually only £3 billion for the government to fund a year, potentially even less, which they're spending on 1.2 trillion at the moment. So it's a very small amount.
Yeah.
And then that compounds. So actually, there's more money going into UK business, and it's just such a great way to fuel the economy.
Yeah. This is the great thing. And then, of course, we all know there's no way that we're getting a state pension kicking in at 67 years old. It's going to be 75 by the time we get to that age. Sammy will obviously get there before I do. But let's touch on the irony of the name. So you've got 3 sets of businesses. There's the Up the Gains, which is the content. There's the Money Gains, and then there's a new one, the Gains app.
Yeah.
But the irony being that you haven't been gaining yourself, have you? So Sammy was a big old chap And how much weight have you lost, Sammy?
Yeah, 35 kilos now.
35 kilos. I want to lose about 3.5 would be a good start, to be honest.
Yeah.
But that just shows the discipline that you're prepared to put in, not just in those businesses, and you know, so you deserve everything you're getting there, but it's the same discipline that you can put in to something like weight loss. Is your stock portfolio as disciplined?
The stock portfolio is even more disciplined.
Right.
Even more disciplined. Like, yeah, with the weight journey, it takes a long time, and you do have the occasional cheat days. Like, but I don't tend to cheat with my investments as such.
Okay.
So, it's crazy. Like, one thing for me is the old cliche of wealth is health and all of that, but when you're building something and you're working extremely hard on, say, you know, a business or stock investment portfolio or anything like that, and it takes a lot of time, there's always some level of sacrifice which you have to take. And if you're putting a lot of time into your investment research, it's going to impact the amount of time you spend with friends or family or whatever that might be. And the thing for me was I gave up my health a little bit to build the businesses. And then I'm on camera quite a lot.
Yeah.
So you start noticing it. And I was like, I've always been quite a healthy and fit sort of person. And so I was like, something's got to change. But it took 18 months. So it took a while.
And the first 6 months you were going through the gym and thinking you could do it that way and exercise, but it's diet, isn't it?
It's diet. I you know, that you always think like, oh, it's so cliche, again, it's boring, like listening to these fitness influencers, like 90% of it's your diet. You're like, oh yeah, whatever, I'll out-train it, 100% will, and you won't. And so as soon as I got my diet dialed in, actually, weirdly, like, that happened rapidly from that point, and also you feel like really energetic, you sleep better, and it's crazy because the moment that I started doing the diet thing, it's almost like at the same time the business started really kicking on as well, because
it's not a coincidence, is it?
No, you're
And
making better decisions.
I know my boss Sophie's going to say, why is he talking about diet? But it all feeds into mindset.
Exactly.
Right? And I can tell my portfolio, my positions, even, you know, the interview on air and everything, if you're not in the right mindset, then everything starts to fall apart. And it doesn't fall apart at once, it's a gradual thing.
Exactly.
And if you see your portfolio start to fall apart, then there's a tendency to take more risk because you're losing a little bit. And when you're only losing a little bit, you think you can solve that by taking more risk. When it starts to fall apart, that's when you should be cutting and cutting and cutting.
Yeah.
What, in your own investments, you're slightly different in that you don't do short term, do you? It's
Occasionally. So we'll do the occasional swing trade, but our swing trade will last 6 months.
yeah.
So we'll find a very undervalued company which is so obvious, and that we'll get in knowing we've got a target for it, and when it gets there, we're out.
Any examples?
One that you kindly gave me, which we've held a little bit, but we've taken a little bit off the top. Nike is a good example. Marks and Spencer's another one that we jumped into and did really well out of. That we held a touch longer, so that was actually just under 18 months we held for, but we're out of that now.
So that would have been from sort of £1.50 up to
Right
£3
up.
kind of thing. Oh,
Yeah.
brilliant! Well done.
And we did really well out of those. We've had some losers in there, of course, or ones that we've just had to stick with because they haven't moved.
Yeah.
But you know, it only takes 1 or 2 winners, and that's the way that we like doing things. But you're right, like we like selecting smaller, not smaller, you know, these are £1 billion market cap companies, but they are smaller in terms of comparison to your Magnificent Sevens, etc. We hold them for 3 to 5, so we're really targeted about where I place. I say I'm targeted about where I place. Like, I don't go into biotech or green energy or these things because I don't understand them. And so I spent all day in fintech and all day with e-commerce businesses.
Yeah.
And so I have such a better understanding of those spaces than others. So I stay right in my own lane. And if Dave down the pub tells me about this fantastic new company which is going to moon, I just forget about it.
That's the one to avoid, isn't it? And I just fear, we have a wonderful Discord, and this has been started by one of our viewers, Maturin, and it's going really well, and it's built up to now 100 people. But the guests that we come on do talk about smaller companies sometimes. And we've seen, Smarter Web, and I certainly, got involved in the Smarter Web. The smaller companies, when people are passing around ideas on things like Discord and Reddit, was a good example. They're great in bull markets, but boy, oh boy, do they come off hard in unbull markets, let's say. It doesn't necessarily have to be a crash or anything like that, but liquidity dries up and disappears.
Yeah.
Have you had any shockers where you just suddenly, why is it down 20% kind of thing?
Yeah, look, it happens all the time, and I think that's what we need to say and have that and bear that in mind. Is you're going to go through a correction, stock market crashes. We all know the numbers, and it's every 3 years it's going to drop by 20% or more, and so you've just got to be wary of that. It's how initially when you start investing, you perhaps take on a lot more risk than you're actually physically comfortable with.
Yeah.
And then once you realize and you have these drops and you're like, oh, I don't like that, I'm going to de-risk myself a touch now. And that's why I follow the 80-20. I like 80% in index funds, 20% is fund money. And that's the way I call it.
Right. And that's 80% of your total investment pool, or your SIP or ISA, or?
Total investment pool in index funds. In my pension, for example, I'm just straight index funds. I just leave it, let it do its thing. Occasionally I'll come in and out of touch or go more to cash and pull back up. Usually after listening to you, Rich, in all honesty. So it's been good recently. The main thing is really for me is I used to be 80-20 the other way around, and I went through multiple drops and crashes and just didn't really enjoy those periods as much. So right now we're actually more about 70-30 because we had some storming growth from some of the companies in there, but it will be time to rebalance, I think, very, very shortly.
Right. Palantir?
No Palantir. No, it's just not in my lane. So I tend to stay away. The only ones I have got in, for example, is Nike, like we've mentioned, is just I buy everything Nike. Danielle in the studio will know, like my entire wardrobe is Nike, and I've had to stop buying it because basically give them all my money. But I love the trainers, and so I just love the business, and so that was a bit of a different one for me. But Marks and Spencer, as I'm sure I mentioned earlier, people might say it's retail, but actually a massive part of that business is e-commerce, and they started to turn around online massively at the time I got in. And they brought a new fashion designer in, and they started bringing Reese and Jaeger in, and it was.
I only noticed that last week that they've actually got brands now.
Yeah, loads, and the stores are amazing. If you go in there as well, like menswear in there, it's just phenomenal. So yeah,
Potentially time to take advantage of the cyber attack that they went through recently.
really interesting. The stock price didn't move much during that period, which is quite like eye-opening.
It's telling, isn't it?
Yeah.
Okay, back to your podcast then. So 153 episodes. I'm sure it took a bit of time to get going. But of everybody that you speak to, is there a recurring theme when it comes to investment and managing your money? Is there a real thing that sticks out that perhaps the viewers could benefit from in their investing as well?
Yeah, it is the same thing, but every year, we've had some investors that have come in that have been doing this 30 plus years, and every single one of them is just like always says, you just got to be patient. It doesn't happen as fast as you want it to, and they've made most of their returns. We've all seen their own Buffett returns after his 65th birthday, but it's so true, and people just inherently just completely forget that, and they think that they're different, and the fact is that they're not. And so you just have to be patient. Yes, you're going to have a great year, but it's going to be followed by a bad one or a stagnant couple. And so I think people get really carried away and just need to lengthen their
horizons.
Yeah, and gratification and the way that it works.
Well, this is life as a whole, isn't it? And it takes us back again to the eating thing, right? It's that instant gratification that people are chasing. Chasing more than 25% gains in a year is going to be problematic. We had a long conversation on the podcast yesterday and before the podcast as well. It was probably more heated off camera than it was on camera. And in the art of investing, we have had a really incredible 2-month performance. Now, we're getting close to our target for the whole year. Is the whole market demonstrating some kind of greed at the moment?
Absolutely.
And, you know, we know what happens next, don't we?
We do. And you came on the show and said it was going to drop by the amount that you said it was going to drop, and it happened within 3 days of that show. And we had to rush to get the episode out because it was so timely. Like, you know, and we've seen the indicators. They're all showing it's extremely overvalued at the moment. And I think it's time to perhaps protect yourself a little bit. If that was me, I'm not saying that's not financial advice, of course, but I think it's grown to like insane levels again. You know, all the indicators are showing that, and so I think it's a little bit of a time to just perhaps evaluate what's going on, and if you've got any sort of wide open positions.
I always love, especially on Fridays, I love when people take their balance at the moment, right, what the account is sitting at, and then right now take that number by 20%. How does it feel to be looking at that number 20% lower than your peak?
Yeah.
Are you happy with that? If that doesn't really disappoint you, then you can still take risk. But if it does disappoint you, time to rein it in.
A good way at the moment is a lot of these accounts are giving you interest on uninvested cash. So ask yourself,
Including IG, 4%.
Exactly. Yeah. So like ask yourself if you're happy with almost like the inverse of that. Well, if you went in some of it in cash and you made 4% out of it, or you lost 20%, yes, you know, you're not getting your 10, 15, 20% gains from that point on.
Yeah.
But your protection at that point when you can see that the indicators are showing. So I think the introduction of the uninvested cash element in a lot of these accounts is like enormous, because it just gives you that like a little bit of safety. Oh, I don't need to then pull that out, put it in a cash ISA just to get something off it. You can just leave it in the account ready to go. And I like having a little war chest. I always have 3 to 5% in cash, and I'm probably pushing a little bit higher than that now.
Because life can be expensive, can't it?
For sure.
And if only there was an app which helped life be a little less expensive.
I like what you did there. Yeah, exactly.
Now, what is this new what do they call it? String to your bow.
String to the bow, yeah.
Yeah, tell us about, maybe we can get it up on screen as well, Gains app.
Thank you. Yeah, so we have spent a lot of time making content in the space. We deal with people at mass scale. We do about 130 million views a month at the moment. It's nuts. And so with that comes a lot of data and a lot of questions, and we are seeing what people are struggling with most. And yes, we know more people should be investing, but the day-to-day management of their money is a massive, massive problem. Yeah. And so we've created a budgeting and cashback app, which is powered with AI and open banking. So essentially we can personalize someone's spending insights. So you can essentially download the app. It will be out later in November.
Right.
And you connect your banks. You get a 360 view of your money, your savings accounts, your credit cards, your investment accounts, exactly what's going on. But then the AI can analyze those and give you insights and things to do. But it can also then save you money on the front end. So when you're everyday shopping, if Rich goes to Tesco, I go to Sainsbury's, it's going to know that, and it's going to give you instant cash back offers.
Aldi for me.
Aldi for you. Yeah, I'm more Waitrose. I do apologise. So it's really cool because it's the day-to-day spending of your money. At the moment, what you would have to do is you'd open your banking app, your budgeting app, you'd have a spreadsheet or a bit of paper, and you're writing out how much things. Here you can just come on and go, how much have I spent on takeaways last week? You can actually talk to it as well.
Right.
And it's going to go, bing, you spent 74 quid in these retailers. And so it's going to really have that sort of instantaneous view around your money.
Yeah.
Getting you the answers that you want to kind of help you plan ahead for those bigger things, those moments or those investments that you want to make as well.
So out in November, but you can join the wait list at the moment.
You can indeed, and you can get every single person that signs up to the wait list gets entered in to win their shopping paid for an entire year.
For a year?
For an entire year.
I'm sorry, I'm not Aldi. I take it back.
You can go wherever you want. You can choose it. So we'll pay for your shopping for an entire year. Yeah. So you'll be one lucky person.
That's unbelievable, right? Everybody on the wait list, go on. You got to share it, right? If one of our viewers wins it, I want some involvement in that.
Free shopping. Come around and cook Rich.
Right, you got the thumbs up from one of our VIP viewers. Kate Murphy is saying, loves Money Gains, love this podcast, need to revisit. Have there been any funny moments on? Go on, take us through your...
It's Michael.
Is it? What do you mean?
It is Michael. He said something that just got me at the core, because it has its funny side, but what he said was quite powerful. And he was saying, you know, you should shop local and stop giving money to big corporations.
Yeah, he hates
and we were
the big
talking about
corps.
Starbucks,
Yes.
and how his literal hatred for it. And then he dropped the bomb that the coffee tastes like burnt cigarettes. And I was like, I couldn't. It was one of those moments in the studio that I couldn't stop laughing. We had to stop recording because the way he says it is so dry. But unfortunately, because it's a money podcast, it's not like a comedy show. I think a big thing is to tune into Rich's episode and you know, watch his prediction.
Well, we got another one. We're just, yeah.
The timing is perfect again, because we seem to be at almost exactly the same point. So it's be interesting to run through this time.
Actually, I'll have to watch it back before Monday to make sure I just don't say the same thing again, because it feels like it. But let's take a look at Starbucks, because I've had a couple of very smart people, including Julian Wheeler. This is actually when we were off camera on Wednesday it was that Julian was in. Starbucks is one of his favorite shorts, and that's the second really smart person that I've heard. So, you know, not just Michael talking about how bad the coffee is. This thing is showing really poor price action compared with what the S&P is doing. And I just want to keep that in your mind, because Julian thinks it's going to 60. I could definitely see it at 70, which is a good sort of 12% lower. Starbucks, Julian's point is that it's going to have to shrink to start growing earnings again. He cannot grow earnings off the current base at the moment. So,
yeah, well, they're closing a lot of stores, and they got rid of a lot of staff, especially in the UK. And it doesn't seem to be getting much better across the world as well. So it's a very interesting one to be looking at in terms of that at the moment for me as well.
yeah. So, anything else any other stocks or companies or indices that you've got your eyes on at the moment?
So I'm not adding at the moment. I'm being very careful. I've kind of got my positions. I have a lot in fintech in the US. I have the likes of SoFi and dLocal and Upstart as well. I love those types of businesses.
Take us through some of those. Sorry, I don't know SoFi.
SoFi are almost like the British Monzo, the American Monzo. They have a wide berth of current accounts, but they also have kind of like an embedded IG into them as well. They do crypto loans. They started out as a student loans company,
Okay.
and then have developed a sort of full financial suite. The CEO, Anthony Noto, I find very impressive. And it's that real challenger bank. And I think the US at the time was kind of ripe for that, as we've seen with the rise of Revolut and things like that as well across the world.
Yeah.
I think the US was really ripe at the time. And I've had it for quite some time now. And every time it drops back down, it's had an incredible run.
It really has.
And yeah, it's one of my favorite holdings.
For anybody watching, that was $10 back in the April sell-off, and now it's 28. So sorry, anybody listening and not watching. So yeah, 280% return. Nicely done, sir.
Yeah, it's been great, and we will continue to add anything above sort of 15 for us, because I think that below 15, if it drops anywhere back down at those levels, like, we will be very hungry.
Yeah,
because it's growing.
That, and we do have to touch on that, in that I'm 100% cash at the moment. Anybody, now that is really making a strong statement to, I think we get a correction. Don't know if we get a crash, but we get a correction.
You're 100%.
100% cash as of last week.
As of last week?
Yeah. SIP, ISA, pension.
Oh, you went big.
100%.
Oh, interesting.
Yeah.
Okay.
So
We've been
I should have
creeping
kept
it
that
up
for Monday.
by the day. Yeah, no, fair enough. I'm gonna have to ask you about now.
Well, yeah, and you know, by no means do I think I can call the top or anything like that. But I thank you, OJ. You know, I'm not pretending I can call the top, so it might go on for weeks yet. in 2017 going into 2018, I was a month early. But then we got a 10% correction in a day, right? And that's what it feels, that I feel like we're building up towards that.
I have a question for you, if you don't mind. What do you think the catalyst will
So
be?
he can't help it.
Yeah.
The interviewer.
100%. It's just I was discussing this yesterday with a couple of people, and they had different answers, and I found I'd love to know yours. So, like, what do you think is going to be the trigger this time? Because the last one was Trump.
Yeah, and this came up in our own podcast yesterday in The Art of Investing. We were saying there's no way you can ever guess what the catalyst will be, but you can certainly watch out for the canary in the gold mine. And that's what we're going with at the moment. It's obviously gold has, in my opinion, has now become a risk asset.
Yeah.
The first brand's credit implosion, right, is a mini SVB moment. And the market has not blinked, right? You've had a huge business which has cost private equity and the banks, in the hundreds of millions. So I do think that is that the start of something? Maybe in 3 months' time we see more private equity deals that have gone really bad, and they actually have to write the real figures down. So leveraged private equity are certainly two potentials.
Interesting.
Right, it is 9 a.m. It's time for Angie's Espresso. Sorry, we've run. I hope Angie's got her caffeine. Samuel King, thank you very much for coming in.
Thanks, Rich.
And it's been really interesting. Money Gains on the YouTube channel. It's easy to find, isn't it?
Yeah, very easy. Yeah.
And it's in the chat, and then the waitlist for the Gains app is in the chat there as well. Sammy, we'll see you Monday.
See you soon.
Stand by for Bill Blaine. He's coming up after Angie's Espresso with his morning porridge. Welcome to The Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Welcome back, and we are going to check in on the pre-market for you. Let's have a quick look right now because we are 4 minutes in. Remember, many of these names now in extended hours or 24-hour offering here at IG. just having a look at the gainers first. We got Terra Wolf up 5.3% there. Nicola as well. Beyond Meat, interestingly, very volatile there. For those of you that are intraday, I hear that many are watching Beyond Meat because it is so volatile. The iShares Silver Trust as well, 24-hour offering there. Let's have a look at the losers list. Tilray is down more than 3%. We got Pinduoduo down more than 1%. I was quizzing Olga earlier on outside the gallery because she had a great deal to tell me about Smile Pay. You've heard about me talk about this before, where you can make payments using just your smile. It needs to see teeth if you've tested the ones that are being rolled out in China. But the basis is you might have you forgot your wallet, you missed your iPhone, left it on the work table. Never forget your smile, as Phil says. So apparently that is already a real thing in major cities in Russia. Taking a look at ASML as well. Call out to Ronnie Eggnog there. Down 1/3%. Lucid as well, down 1/3%. Right, I hear from the gallery that we have a winner. Oh, guess the chart. Was it Tilray? Funky Gibbon was the winner of this particular. Yes, I would love an espresso, but it's over there because Rich and I have been swapping chairs today. My espresso, I have good news for you guys. I have had loads of many hours under my belt now. Had I known I was going to be doing this, I would have gone into IT programming, not finance and broadcast. But just as a sneak preview, what I'm working on at the moment, for all of you that thank you very much that gave me your comments both on Discord and also on email. I'm going to share this for you instead of the Market Espresso today because it's looking like a quiet one. But this is the amount of programming. Let's whack that up for our trader friends there. To have a look. Shout out to Andy Pandy, who's been helping me to get it to happen. Let's have a look as well at a template that I am trying to build here with Andy Pandy. Just a quick heads up and also a call out to some of the people on the chat that have been integral to Market Espresso. We have had, of course, the wonderful Monkey Man, Andrew McKilvey, Maturin, who is Paul. Thank you so much for all your comments so far. Right, we've got Bill waiting in the wings. Bill Blaine, let's get him on. Hello, Bill. How are you?
I am just, yes, take it easy.
All of you waiting on Bill, our Friday special guest here, hopefully with dinner jacket this time, his dog, to talk about the markets and what the bond markets are signaling, because as we all know, stocks don't just operate. It operates in conjunction with many other spaces, and Bill, very much the bond man here, to talk us through what signals the bond markets are showing. So Bill, a bit of a slight wobble yesterday, NASDAQ, the session before too, but we still look like that the rally is in place.
It's very interesting. As you know, I was up in London yesterday. I spent the day chatting to a number of very interesting people, different perspectives on where the AI bubble or rally, depending which side of the bench you sit on or sitting. Be worth just calling up a long-term chat on the Treasury, though, the 10-year US Treasury, and just having a quick chat through that. You know, one of the things I found most interesting yesterday was Jamie Dimon, the most successful banker on the planet, the man that leads JP Morgan, with unquestionably the most important bank. And he's warning of a major market correction sometime in the next 6 months to 2 years. Talking
That's a
some
bit
of
wide,
the top.
though.
It is a very wide, and it doesn't really give you much of a clue. It's a bit like saying it might get dark later today. You know, but talking to some people in the tech market yesterday, my view is that we are probably due some kind of correction in October, and I can go into the reasons I think it's sooner and go into my timing thing in a moment. But other people are saying that there's still plenty of steam left in the AI market, which is the thing that's driving stocks, and that will continue for at least the next 2 years. Now, of course, I'm sure everybody watching this morning has read all about the circularity issues that surround AI, that when you have NVIDIA making investments into the firms that are buying their chips so that they can buy their chips, and Oracle doing the same thing so they can build data centers, you begin to worry about just how big it is. And one of the questions I was asked yesterday was, well, what is the catalyst that would change this? Now, I'm thinking back to this summer, and you and I discussed it at the time, and it was Facebook going out and hiring AI people with 8-figure salaries, and, you know, giving them 100 million. That's a 9-figure salary, isn't it? Yeah, 100 million packages to come and join. And then suddenly in the summer, Zuckerberg announces that's it, no more hiring. And I thought, right, that's a clear signal that we've reached the frothy top. But no, we haven't. It continues. But all I think it would take now to put a wobble into the market, which I believe would trigger the correction, will be one of the big hyperscalers turning around and saying, okay, we are building new data centers the size of Manhattan. And just looking at the way that people are now using open weight rather than closed weight, so that's smaller language models where you can embed your own tech rather than the large models, closed weight systems. And one of the big hyperscalers says, you know what, we're not going to build as many data centers as we want. And it will be that data center inflation bubble that pops. And if you stop to see that spending accelerating the value or the perceived value of AI, I think that's going to be a trigger. Now, I've given you a very specific 1 month, October. As you know, I suffer from a dread disease called octophobia, an irrational fear of Octobers. That's because October,
he does have this every, you know, it's almost like a, if you speak to Bill before Halloween, you will always hear this word that he brings out without fail.
I stand.
It doesn't really roll off the tongue, you know. It doesn't really roll.
No, it doesn't. But I make it roll. Octophobia. Octophobia. Right. So there's me standing on the edge of the Roman Forum, dressed in rags, going, "Beware, October." It's always the most dangerous month. It's also actually one of the months where you get the best returns in markets. But this year, I really do feel that there's a whole series of factors coming together. There's lots to be happy about in the market. And, you know, all credit to President Trump, because it does look like we got a solution to the festering sore of Gaza. I'm just hoping he doesn't make a fuss if he doesn't get the Nobel Prize this year. But we got to be honest and give him credit for it. So that's one thing. But on the market, the fact that people like Jamie Dimon has come out and said 6 months to 2 years, he's not the only major talking head who's coming out with predictions. Loads of other people's, from Ray Dalio right the way down to Ken Griffin, who are also saying things like, this market is overinflated. Now, this is all correction talk. It is not crash talk. Crash is when we get a whole bunch of other factors. And one of the key ones I've been watching is, what's it called? US company that just defaulted. And we're looking at the way it was financed. First, my mind is going, That's because I was out for you with you for lunch yesterday. That started things off badly.
I had the glass of water, might I add, with the pie.
Yes, I got
And Phil
starched
says,
on
thank
the
you for the
slider.
Guinness.
Yeah.
I just want to, you can continue. Just going to put one thing out there because I have to be devil's advocate. Get what you mean about the, close weight and open weight, but aren't you a few years out? I've been speaking to data center providers, those that scale it up, those that are building data centers to actually rent them out. Look at New Way, one of them, and you can Google it right now. I'm about to head to Asia soon, as you know. People there, every grandmother, great-grandfather, child, dog, pet, hamster, they're all using and getting addicted to AI, whether it's through mobile phone or tablet.
Driver.
And it's not just the fact that data center demand is just working through AI workloads, but it's heavy compute from everything. My car speaks to me from 30 miles away now to say your door is open. There's a second issue, Bill, that I'm not sure you have looked at. I know you're going to grab one of your big books now, or your box of tricks. But the second thing is security. You are not going to have the UK government or the US government. This sounds like a poll here, going, yes, we're going to use all this, open weight and closed weight models, and we're going to mix it up and, let the Chinese sell us this product or sell us this chips for this product. There is a huge security issue out there. You're going to give us a history lesson now.
Let me jump in, and yes, I will give you a history lesson, but let me say, first of all, when somebody building data centers tells you that the demand for data centers is going through the roof, ask yourself the question why the person building data centers
I've
is
also
telling you that.
spoken to those that are buying space in their data
Does
centers.
anyone know what this is?
Is that the Nokia phone, the first iteration,
No,
or the
no,
Motorola?
Yeah, I need to figure out how I get this in
Get
view.
it closer to the
there we go.
closer to the lens, darling. There we are.
I'm not
Brick
even sure
phone.
lenses in this thing.
Brick
There
phone.
you go.
Yes.
This is an Iridium phone from probably the late 2000s. This used to sit in my yacht, and this was the highest technology you could buy. You could bounce the signal off a satellite in geosynchronous orbit. And I remember actually, to prove a point, we did a trade from the middle of the Irish Sea, and it was in US Treasury bonds. And we made $800 on that trade. And the satellite time cost $1,200 to do it. But it was to prove that it could be done. And then I have, and this is all out my magic drawer. This is, I think, an iPhone 2. And this is just plucked out because I keep all that old tech. I don't know why. But the thing is, my current phone does so much more. This thing here, the latest iPhone, it does absolutely everything because you keep seeing evolution in tech.
Which you keep
And I
dropping.
reckon that the final iteration of AI, it will all be built into the new phone that Google and Johnny Ives, OpenAI and Johnny Ives are designing. It's going to completely revolutionize things. So yes, there is stuff to come in AI, but at the same time, the tech, the steam tech of data centers, you're eventually going to power a whole data center on a chip the size of an electron.
Totally. Anyone that's watched, Men in Black, you've seen the universe is in that little bell
And that's true,
on the
everybody.
on the cat. However, I'm not disagreeing with you on that front. I just think maybe you're a few years out.
I'm never wrong.
But you've even said you're like that
most
Greek.
of the time.
You're like that Greek character. What is it? Cassandra, is it?
Yes, Cassandra constantly claiming disaster lies around the corner.
Yes, yes.
And,
so you might be right. You might be
listens.
right in 2 to 5 years time. For those though that are looking at the next 5 months, 6 months.
Can we agree on one thing, and that is there are signs to be concerned. Now I may be dramatically too early.
You're
Jamie
dramatically
Dimon,
very
in his
early.
prediction, may be dramatically too late. But when people are warning that this market is unsustainable and that we're going to see the froth break, that's one opinion to have. And you're absolutely right. There are lots of people that balance my opinion. And yesterday we had a fantastic debate about why there won't be any turnaround in AI for some time. It's these opinions that make a market. And what you need to do is you play it two ways. The first is, are you an investor in
Or a
which you're
trader.
looking for the long term as to which ones are likely to be the winners and the losers? So you're looking at which ones are monetizable. Is it going to be Meta? Is it going to be Google that comes out best amongst the hyperscalers? If you're a trader, what you're doing is you're listening to the mood and you're trading with the market sentiment. Now, the market sentiment has become slightly more shaky in recent days. That's because people are concerned, not just about how frothy the AI bubbles got, but then we look to the other factors in the economy, and we simply don't know because of the lack of data what's going on. So we're listening far more now. And yet again, I'm going to refer people to my favorite analyst in the market, Torsten Slok of Apollo. You can sign up for his very simple. He keeps everything to one sentence, talking about what the data means. And then the lack of data, you have to figure out whether that means the US is inflationary, which I doubt, is recessionary, which I doubt, because all you need to do is look at Delta's results yesterday, the US airline, and it is going great guns because people with money are spending. But at the same time, we also need to look at inflation. And if inflation starts to tick higher, then interest rate cuts are off the table. And it's cheap money that's been feeding an element of the AI boom. And if we see interest rates remaining high for the long term, I'm taking more chips off the table when that happens.
Let's just
So
take
yeah,
a
you're
look.
absolutely right.
Let's just take a look at a 5-year view of total data center capacity in gigawatts. So duration here, 5 years. This is a combination of data from across industry trends, including AI boom, hyperscaler expansion, looking for industry forecasts from sources like IDC and Gartner as well. So they've combined that in here, and we see a line that is straight up there. Now, I'm not saying, Bill, that it's not going to fall off, as we've seen with the Nokias, as we've seen with, the Wright brothers, as we've seen with other spaces. But I'm just saying, just in the next 5 years, we are still going to see this rise, and perhaps you might be slightly too early in that game. Let's have a look at another chart here.
Can we just stick in this one for 1 second? Because there's one critical line that we don't see on this chart, and that is energy costs.
Yes.
And that's going to be another critical factor that determines just how sustainable this explosion of data center building goes. There's a great piece in one of the papers.
I love this, because I'm hoping you're going to say something that will be music to my ears, Bill. Music to my ears.
Okay, let's see. You can either give me a or a ding ding.
Okay.
What I've been looking at is the cost of energy in the US. And there's a great piece in one of the papers this morning that pointed out that if you live.
If I live, go for it. Have we got Bill?
Energy.
There we are.
Yeah, I'm still here. Yeah. If you live anywhere near a data center.
Energy issues. Repeat the question, because you got cut off earlier.
Okay, so what I'm saying is, if you live anywhere near a data center in the US, consumers are now finding that their energy costs are going through the roof. Surprise, surprise, surprise. There is not enough energy available in the States to power all these data centers. They need to embark on a massive program of energy construction. And that is one of the reasons underlying Trump's decision 2 weeks ago to free up coal mining, because coal is going to be the fastest solution to energy shortage.
Bing,
I mean, I think, I've got a ping, have I? I've got something. My goodness gracious me, I got something right this morning. Can I wear my little well done Billy hat? No, but look, one of the things that people are guilty of in this market is what we call Trump derangement syndrome, which is where you make the probably correct assumption that man's a complete idiot, but nothing could be further from the truth. Trump is exceptionally clever, and I think he sees a lot of these things. His delivery ain't great, but he's picked up very quickly, or is taking the right advice about what needs to be done in terms of providing power to the US. And that's why in the chart you just showed about data centers, it's going to run into energy shortage. And that's another thing that's going to, I think, affect the thing. Now, that's probably, you're right, 6 months to 2 years down the road. My gut feeling is that markets tend to wobble when they see something 2 years down the road, and they react much sooner.
Bing, bing, because I'm making that sound because you've said a second thing that also is music to my ear. So energy shortage. Let's take a look at this forecast. Friends, you've heard me say many times here.
By the way,
you know,
we did not rehearse that. That was completely natural.
I love it. I love it. This is why this show is magic, because none of it has been, you know, pre-rehearsed or pre-agreed. We are going off our positions, and the one single way of being authentic about this is to not pre-rehearse stuff. Friends, if you have any questions for Bill and myself, put them through as well. So this is also research that's the source is Gartner, and we're looking at power growth. And Bill is indeed right. There is going to be a huge demand for power as everyone tries to make AI pictures of themselves, you know, as, I don't know, Lord of the Rings, or, you know, Monkey Man as, you know, Stranger Things character, that sort of thing. Love Kate Bush, love Kate Bush. But, you know, just take a look at those lines there, and what all this will tell you is there's going to be a huge amount of need for power. And that plays right into Andrew's power thesis, that we will, this is why I've got an ever enlarging position in uranium for that base load. You've heard Julian Wheeler from Shard Capital talk about that with me here as well. There are already power shortages. We don't have to wait till then. It doesn't take a smart person to just Google data center and water shortages. Many places in the US now starting to see reservoirs and rivers really shrink away. Now, the market explosion of this AI optimized spending will triple traditional servers by 2027. That's not too far off. And we're already seeing Monkey Man and many others on the chat that perhaps this could be why we are starting to see, you know, companies perhaps hire less. I'm trying to find data points on this, Bill. If you've got any data points on that too, I would like to see it. Your
comments in uranium are absolutely spot on. But the problem is uranium, great solution, but it's a 5 to 10 year program. We face,
that
as
is my
these
duration.
charts just show,
Bing!
an imminent problem. There is actually a chap we should get on the show one day. I'll chat to you about him later, who is an absolute proselytizer for uranium. Must bring him on.
Well, I want you to bring someone on that's going to poke holes in my theory. Then it gets exciting, because I want someone to say, you've missed this, and that's what makes a market, right?
Exactly. Markets are basically people pricing their different ideas against each other.
Yeah.
Or as I once famously wrote, it's biased stupidity.
Yeah.
Weighted biased stupidity. Anyway, there you go.
There we go.
What's next? What's next on the list of things to shoot me down about this morning?
Never shooting you down. I love your ideas, because it makes me think after the show, maybe I should rethink my position on that. Maybe, but this is one I feel passionately about. I did want to go to Texas to see this with my own eyes, but if you also Google Texas drought and AI, you will see what I mean. That I spent a long time trying to explain to my parents. One of each take 60 photos a day that you're causing a drought in Texas. They said, But it's free, right? All the pictures, 60 a day on average. I did calculate it. It's going to the cloud. The cloud's free. This is what we're dealing with, Bill. And they're not the only ones. So taking a good look back elsewhere on the markets, where do you think we might see, for example, commodities as a hedge, given that you're expecting a correction, coming? Is this a good way to hedge if, let's say, you still want to be in, but you don't want to be completely out? You don't want to be just sitting on the sidelines holding those cash bags.
Yeah, where are we on commodities? That's the ultimate question, and there are two sides to that question, or three sides to answering where commodities go. We've clearly got this massive rally in gold, and that's really an uncertainty and instability argument. Then we've got the useful metals. That includes silver and palladium. Massive rallies going on there, because if we are going to see a recovery in the global economy after the little shock that it's had from tariffs, and we don't see any slowdown in global supply chains, then the demand for these things continues to shoot higher. And then there is the argument, the third factor, the argument that we're about to embark on a new commodities super cycle, which is going to be powered by this change that is going on in the whole global economy and the way it functions. As America's period of being the global hegemon comes to a sort of usual end, all countries that become the most important country eventually get replaced by the next one. And that's happening at the moment. We are seeing the Asian superpowers becoming the new economic and global hub. China clearly has ambitions to be the new hegemon, but I think there are doubts whether the Chinese economy would be able to sustain that, because long term we're talking about demographic issues. And I think it's more likely that economically we will see the whole of Asia, Southeast Asia, which includes China, India, and Korea, Japan, and all the emerged economies being the next future. They are where all the middle classes are today. That's where wealth and consumption is concentrated. These are the guys who are going to buy future tech. These are the guys who are going to drive demand for all the precious metals that are used in building tech. So that could be the driver of this coming super cycle. So commodity is absolutely critical to watch here. Not sure it's time to jump in with both feet, though.
Gosh, if only I had you early yesterday, I would have put you on set with my CIO of INQQ, who flew all the way from San Francisco for us to be on the show, Kevin Carter. He's the CIO of the India Internet UCITS ETF as well, because he is, of course, very bullish India, and much of this is based on e-commerce and fintech companies there. But you have an interesting take on India investing there, and I think it's the Bhattacharya. Is that the Bhattacharya?
Yeah. No, years ago, one of my best mates, and if he's watching, shout out, Proddy. One of my best mates.
I was thinking, my parents are watching Too Big a Beers. They're going to be very upset with me talking about their photo taking obsession.
Okay. Anyway, so Proddy Bhattacharya, one of my best buddies in the market, worked with him for many, many years. And Proddy is, as you can guess, he's Indian heritage. And Proddy wrote the famous Bhattacharya rule based on experience on trying to do business with certain Indian entrepreneurs. And the rule was very simple, that based on the fact that these guys were only ever happy if they walked away with 101% of the profits from any deal, it was probably better not to bother dealing with them at all. And so the Bhattacharya rule about being doubly sure of your due diligence when dealing with some Indian companies went into place. And that later proved to be very, very interesting, because there was a transaction involving a producer of aluminium, which ended up causing all kinds of problems a few years ago here in the UK about the amount of money that had been raised for various things by a well-known Australian receivables finance firm called Greensill. And we had always taken the view that the company that was borrowing the money seemed to be double counting their commodity reserves, and they seemed to be pledging them multiple times for loans. And we got very suspicious. Now, I'm not sure how much I can say about this because I believe there is a court case underway just now that isn't quite resolved. But fair to say, looking at the collapse of, is it First Order in the States this week? And one of the things that we're reading now about how much Jefferies was exposed there, we're reading that UBS has taken a massive hit. And that just set me thinking, because UBS, of course, is the last surviving big Swiss bank. There are others, like Pictet, but the biggest other rival to UBS was Credit Suisse. And the thing that brought them down was their involvement lending with Greensill. And that was one of the prime contributors to the death of Credit Suisse. And then as I'm reading through all the stuff on this US collapse, I discover that one of their prime problems has been their receivables. And guess what? Their receivables were all being managed by a guy who used to work for Greensill. As I keep saying, history never repeats itself, but it does resonate in markets. Now, I should have had all that information up in front of me, and you could see that I was scrabbling with the computer there to find it, but one of my screens has just died. I think I've kicked out the plug.
Oh dear, we can still hear you. We can still, on that note, thank you so much, Bill. Always a pleasure. Everyone on the chat also
always
thank.
a pleasure to be on.
Thanks very much. Bigger Beer says, I'll have to look it up with regards to your comment on Greensill. Right, we have to leave it there, but have a great weekend, everyone. We will be in touch on Discord. I'm building out a brand new super sexy, if I don't kill Claude again, the market espresso for you. Some of you will get a message from you to be my test bed as well. Thank you, Bill. We will see you, and thank you to all our guests this week. We have had, whew, how many? 49. Slam the like and subscribe button and send your questions to me at ask@ig.com. And Rich as well. Have a lovely weekend, everyone. May it be profitable.